Exxaro considering shutting down its money-losing new Clydesdale colliery, more than 400 jobs on the line there. And South Africa's biggest listed coal miner also said it expects first half profit to fall by as much as 45%. Exxaro's share price closed up almost 1/3% to 153 Rand. So joining us for more on commodities generally is Bevan Jones from Thebe Mining. Hi, Bevan. Hi. Looking at that coal sector, we see there not that many coal plays on the exchange, so we take a special interest when one like that reports. But bigger picture, we've got issues in our coal industry, and the one that comes to mind, Chris Yelland put out a statement a couple of days ago about we need to invest in new coal mines. The coal roadmap, we had them in here about 6-8 weeks ago, also say if we don't build new mines, there's not going to be enough coal for Eskom.
That's right, yeah. I think one of the things we're doing at Thebe is we're trying to create a junior mining incubator to develop some of these junior miners and help real transformation in the mining sector and try and see some robust junior miners emerge, because yes, Eskom needs, the figures are about, I've heard about 80 billion rands worth of new coal mine development purely for Eskom coal. And I mean, you must remember that there's 3 markets in South Africa. There's the Eskom market, which gives you a cost plus return of about 12%. Then there's the industrial domestic market, where they supply people like Sappi and the paper mills, the cement mills and the sugar mills, etc. They all burn coal. And that's actually paying a huge premium at the moment. And then of course there's the export market, and export prices have been really low. China's been depressing the market. All these US exports have been depressing the market because gas is so cheap in the US, etc. So we're seeing mixed fortunes really, and but South Africa seems to have a fairly robust domestic market. The demand is there on the Eskom side and on the industrial boiler side, but the coal mines are just not there. So yeah, it's becoming a huge issue.
Coal mines just not there. I mean, it takes a lot to develop a coal mine, Kevin.
4 or 5 years.
Yeah. And I think the interesting thing is the margins of the mines. So for the last few years, as we've seen a rising tide, I'm going back 5 and 10 years, we've seen a rising tide. It was just a matter of developing as much as quickly as we could ship it out. As well as provide it to the local producers. Whereas now, because the price has pulled back from $120 to
about $70. Yeah.
Now suddenly the margins are all important, and so the one that Exxaro is looking at closing down is a low margin mine. Is that right?
Yeah, and it's an export mine, so it has been impacted largely by the fall in export prices.
Yeah.
And if you look at it, Eskom is actually paying, on a quality adjusted basis, because they obviously burn lower quality coal, they're actually paying close to export parity prices at the moment, which is obviously not, they don't want to be paying anything near spot prices. But that's just how far export prices have fallen, that we're in that position at the moment. Yeah.
Bridget, your sense of that sector and a lack of urgency from the people who need to be urgent?
Well, I think that there's a couple of key factors. I mean, if you look at what's happening with regards specifically, if you look in the gold industry, one of the biggest export sectors of our market, and yet because the gold price has fallen so significantly, we continue to face these headwinds with regards to wage negotiations that exceed CPI, etc. It all bodes negatively for the business at hand. Exxaro is an example. However, there are a whole host of other mining magnates that are under a huge amount of pressure right now. And where to from here? And how do we think about this in terms of the longer, bigger picture? Because the investment that was made in the bull run, unfortunately, now is starting to bite back and cost.
And I think the big issue is that no one wants to invest in pre-feasibility, and no one wants to invest in exploration, and you need to do that pre-feasibility work in order to prove that the assets are there, in order to develop those assets, and that's venture capital. And I think Thebe we're looking at that space. We're trying to help the guys with the pre-feasibility work, but obviously the funding is an issue.
Yeah.
But we should be able to bring the mines on. We certainly have the coal in the ground. It's just we need the funding to turn that into assets.
Well, I remember when the government was warned by Eskom in 1998 that in 10 years' time we'd run out of power. People are now warning about running out of mines. On a day when Stats SA reported that platinum production fell by almost 1/5 in June, Jean Nel, CEO of Aquarius Platinum, attributed the group's full-year headline loss to an exceptionally challenging year. A year in which it had to close loss-making mines, face disruptive industrial action, implement an owner-operator model at Clydesdale, contend with ongoing regulatory uncertainty, metal prices underperforming. Wow. Aquarius's share price there closed up almost 2% to R6.73. Well, looking at platinum, Bevan, that's another area where, now of course this was in a sense bound to happen. The supply starts dropping because the demand has dropped. Now the equation changes.
But of course the economy is also quite fairly weak, and you know, what is the outlook for platinum demand going forward? I'm still bullish on the outlook for platinum demand going forward. But yes, we need to see a supply pullback. Unfortunately, platinum traders sit in London and they're not really tuned in with the reality on the ground. They just hear strikes and then they bid the price up $5, $10 or everything's fine, the price comes down. So it is sort of related, but there's not a direct impact on the supply cuts. So that takes about a year to filter through to the system. So we're probably still about 6 months away from a real bottoming in that price. But if you take a 5-year view, you have to be bullish on platinum going forward.
Are you bullish about platinum going forward?
I think I'm more optimistic. You know, those Aquarius results were rather sobering, but I think understanding the year that they've had, you can see why. So coming back to margins, a lot of the Aquarius mines are far lower margin mines than say Northams or Impalas. They were already struggling from an uprising in the labour markets last year with the strike starting in Impala mines, and then we had the tragedy of Marikana, and we've suddenly had this pullback. So I think this is a year of consolidation. Aquarius has had to downscale and go to owner operating mines in Kroondal and so on. I think this is a bad year for Aquarius. We're going to have a consolidation year going forward.
We also had Northam Platinum reporting headline earnings per share 60 to 70% higher, obviously off a low base. That's from an 81 cent per share in 2012. What's your sense of platinum?
I'm also bullish platinum with regards to Bevan's comments earlier. However, I think that the sector in South Africa specifically is under a huge amount of stress. Certainly not from a demand perspective. Obviously, the global demand has diminished slightly, but that's a global phenomenon. I think that the factors that are impacting platinum mining, as we mentioned earlier, the coal mining as well as the gold mining, is a massive concern. And I think that, you know, more and more we notice the sentimentality around that significantly driving these types of companies, and it's a big concern for that sector. So from the platinum perspective, definitely see demand, definitely the commodity of choice in terms of the big three. So yeah.
I think on the mining cost side, all mining companies in South Africa are probably going to face headwinds over the next couple of years. We've also got this carbon tax coming in 2015. It's going to be phased in, so you won't feel the impact suddenly. But you're talking about 120 Rand per tonne of carbon, which equates to about 120 Rand per tonne of coal produced. If you're mining at 200 Rand a tonne, all of a sudden that massively impacts on your margins. Now Eskom's going to want to claw that price back in the electricity tariff, and of course platinum producers and smelters, the platinum smelters are quite industrial users of electricity, so of course they're going to feel these cost pressures for some time to come. This carbon tariff is going to have a huge cost impact on our miners and general industry. And then of course on the demand side, you've got a lot of the banks are under investigation by the Federal Reserve at the moment for owning physical assets like precious metals warehouses, etc. So Credit Suisse, etc., owns precious metals warehouses.
Well, and Goldman Sachs, a pile of aluminium warehouses.
Correct, on the LME warehouses, etc. And since the credit crunch in 2008, they were given 5 years to divest their non-core assets, which effectively means these type of warehouses. And now 5 years is up in September. So the Fed is about to rule on whether they can keep these things. I'm not sure what that means for the price. I think it's probably bearish for the platinum price if the banks have to divest their physical commodities businesses, because they're going to be selling them out, and that's probably going to impact on margins. So you've got a bit of a squeeze at the moment.